Welcome back, and Bidha Mwema joins us now to take us through her thoughts on some of the news coming out from the stock markets. And of course, we want to start off with the Cooperative Bank, which has released its full year results today. What is your take on the full year results, and how do you see that impacting the stock going forward?
Thank you very much for having me on your show. So I listened to what you were talking about on Cooperative Bank. I think the analysis to look out for is to understand why their numbers came down. So they started focusing on operational efficiencies. They mentioned a lot of McKinsey last year, and they worked with McKinsey. So working with McKinsey and trying to see how they can transform their operations and become a lean bank meant they had to release a couple of their senior managers. That has already gone. That has happened in the last financial year. And the focus for you as an investor, either as an existing investor or a potential investor, is to, for example, walk into their new branches and see what they're doing. I took a walk and I went to the branch yesterday that is closer to Bomblast on Haile Selassie, and it has changed. It's a complete overhaul. Before, it was a big mess. There were so many people who are walking around. No one knew what exactly was happening, but the focus on operational efficiency, and they've automated the process. So I walk in, then I press a button, I say what I want to do, and I spend much less time there. So this just shows us that what they're doing with McKinsey is good, and if you have not been looking at it, post the negative results, then it's a good entry point for you at this point in time.
All right. And do tell us, Mbitha, what other banking stocks are you looking at this year?
The usual suspects, Equity and KCB, and I'll tell you why. KCB has a very brilliant partnership with Safaricom. So you can see all these new products that they're bringing on board. A couple of weeks ago, they mentioned that if you're looking to borrow up to 1 million shillings for 6 months, you can be able to do it off your phone. That means that they're able to generate what we refer to as non-funded income. So you have to be cognizant of the fact that there's been a lot of pressure on interest rates coming down, especially from a funding perspective. So then the next question is, if I'm not making too much money as a bank from interest income that I charge to you when I give you money, what else can I make from additional services that I offer? So that relationship with Safaricom is a good one. On the other side, when you look at Equity Bank, the bank has always been very innovative, has always been ahead of the curve when it comes to integrating technology into its operations. And I think the market is just waiting to see what happens between Equity Bank and Airtel. What they've come up with in terms of the MVNO, it's a novel product in this market, it's new. We are yet to see how it's going to operate. And I think when you look at them, you're literally hedging one against the other. You're saying today KCB is working very well with Safaricom, but you're hoping and looking out to see how far Equity will go in maybe the next 1 year, 2 years, or 3 years to come.
Talking about Safaricom, they recently sealed a deal with Vodacom in Tanzania for money transfer as well. How do you see that impacting, first, the perception of the stock, which is open to all East Africans at this point?
I think what you have to look at as Safaricom is ask yourself, when you get kids, when you get grandkids, what are they going to own? Today, if you walk in Nairobi, it's a long-term stock. It's a long-term. And if you, you can probably correct me if I'm wrong, but I've walked around the CBD, and when you look what you used to see as the NCC, in terms of the paving and the covers to the manholes, now you see the word Safaricom and Maverick. So the question is, are you actually going to own a part of this town in a couple of years through Safaricom that has invested heavily in infrastructure, is providing data, is providing mobile services, and is actually at the forefront of taking Kenya from an analog community into a digital community, from a country that has been accustomed to using hard cash to a cashless economy. So you want to be part of that, and you want to be stocking up on Safaricom as a stock for you and for the future.
As we wind up, let's touch on Mumias, of course, which has now just done a notice for an extraordinary general meeting. We know it's about to be bailed out. There's 1 billion shillings and later 4 billion shilling rights issue. You know, is this something that you're paying attention to, given what's happening within the sugar sector across Africa as a whole, and all the COMESA guidelines?
We have to appreciate where Mumias is, because it's in a very tricky place. In one end, it's in an industry that is becoming slightly irrelevant because of the competitive advantage that other regions within the country have. On the second place, you have a company that is very responsible for the economic activities of a particular county. Literally, it's the bank there because the people grow sugar and they're paid by Mumias Sugar. So the question is, beyond just looking at it from a business perspective, what's the social element, what's the social impact? And I think if you're you're an investor in this company, it's important to require that the management can show you, A, is the business model evolving? They have been doing ethanol for a while. We want to be able to understand, are you actually going to do more in regards to ethanol? They have assets such as land, which are actually more valuable than the stock value on the stock market. So the question is, are they actually going to start optimizing some of these assets and developing them and adding value to you as a shareholder before you actually feel committed and take an emotive move to put your money again in terms of the rights issue? And it would be worthwhile just to attend the EGM either directly or by proxy, just to understand and get direct access to management to have those hard questions answered.
All right. I've been told I've got just one more minute to go. And I want to ask you about CIC Insurance, mainly because first it was the bear of the week, but secondly because insurance sector, the penetration level in this country is still very, very low. Do you see insurance stocks as something we should be looking for as investors?
Maybe not on the back of last year's results, but if you look at last year, there was sort of the late comers to the party in terms of price appreciation. And the appreciation for insurance today is the fact that technology is becoming a key differentiator in terms of who gets to the customer first. Companies like Britam have been and continue to be successful in that area. And the question for you as an investor is to see when new products are coming out, then who's literally trying to reach out to me as a potential insurance client on my phone and look out for it. Maybe not now, give it a bit of time, especially if you're a retail consumer, because you don't want to have your money put in a stock that does not necessarily move up or down over the next 12 months. Just keep looking at the products that are coming out, look at the results. Then when you're comfortable and you've exhausted all the other options, it would be a worthwhile opportunity for you as a retail investor.
Right. Thank you so much for joining us on Citizen Business Center tonight. Of course, quite an informational interview. Always come out quite edified when speaking to you, Mbithe. Thank you so much for joining us. Well, we're taking a short break now. We'll be back with Michael Njenga right after this break. Don't go too far.